Hi there. For those of you that don't know me, my name's Priya and I'm a partner at Architecture and Company, the specialist dental accountants. So I have been requested to do a video on buying a car. I know one can't generalize, but a lot of my dentists definitely do love their cars. And so I'm going to do a video today on buying a car if you're a sole trader. If you would like me to do a video on buying a car if you operate through a limited company, please do comment and I will upload one of those over the next few days as well for you. So for now, it's tempting to go into a lot of figures, but I'm going to try not to do that and just talk about the principles. So the first thing I want to do is to talk about the difference between buying a car versus leasing a car. Leasing is where you are just literally paying a lease. It's almost like renting the car. You don't own the car. Now, when you're leasing a car, tax relief on it is very straightforward. You literally get tax relief on whatever you're paying, whatever the lease costs are, but multiplied by your business usage. So for example, if you're only using your car 10% for work, for argument's sake, and 90% personal, you're only going to get relief on 10% of the lease costs. And the one thing to bear in mind when you're leasing is if the CO2 emissions of the car that you are leasing are more than 50 grams per kilometre, you are penalised 15%. So you only get relief on 85%. And that, of course, is multiplied by your business usage. So if you're leasing, it's worthwhile trying to lease a car with CO2 emissions of less than 50 grams. So moving on now to buying a car. So when you buy a car, you could buy outright if you have the money. You could get a loan for it. You could get a hire purchase, which sometimes is referred to as a lease purchase, which makes it confusing because it sounds like leasing, but a lease purchase or a hire purchase are not the same as leasing. That is literally where you are buying the car and you are also taking out finance. So it's two separate transactions. And then the third option is PCP, which is very much like hire purchase. So it's like taking a loan for it, but with one difference, and that is that normally there'll be a certain period. So it'll be, say, for example, 3 years that you pay monthly installments, and then at year 3, they'll say you have to now pay a balloon payment, which is a large payment, or you just give the car back. So that's a little bit different. Now, if you're going for hire purchase or lease purchase, PCP, buying outright or taking out a loan, in all of those situations, you own the car outright at year 1. So because you own the car outright, you just have finance for it perhaps, it means you get tax relief on the capital allowances of the car. Now, capital allowances is just another word for depreciation for tax purposes. So it's allowing for the wear and tear, I guess, of the car. And the rate of capital allowances or the percentage of capital allowances depends on the CO2 emissions of the car. So again, the 50 grams per kilometre, like with the leasing, that is an important figure here. Here there are two figures, there's 0 and 50. So if the car has 0 emissions, so it's fully electric, then you will get relief on 100%, or the capital allowance will be 100% of the cost of the car. If it is between 1 and 50, the capital allowance will be 18%. And if it's more than 50, it will be 6%. So I'm sorry that I'm not going to throw too many figures at you. That's hopefully the worst bit. So what you need to remember for you when you're self-employed and you're buying a car is the rate of relief is going to vary depending on the CO2 emissions. The overall amount of relief, however, is going to be identical, whichever car you go for. You could go for the most polluting car, or you could go for a Tesla. That's the only electric car I can think of. I know there's lots of them. Whichever way, you are always going to get relief on the loss in value of your car. The CO2 emissions just determines when you're going to get relief. So when I say the loss in value, what I mean is the difference between what you buy the car for and what you sell the car for. And when I say sell the car, that's going to be the same perhaps as the balloon payment, because that's deemed to be the market value of the car when you're giving it back, or what you could have sold it for. So if you buy a car for 100,000, for argument's sake, and you sell it for 40,000, 3 years later. The loss in value has been £60,000. Now, whatever the CO2 emissions of your car, you are going to get relief on £60,000 multiplied by your business usage. If you have bought a zero emissions car, you're going to get all the relief in year 1, possibly a bit more, and then have some clawed back in year 3. If you have bought a very polluting car, then you will get less relief early on as a penalty for buying a car that's polluting, and then you will get more relief at the end. But actually your overall relief is going to be identical, absolutely identical. As a sole trader, the only time you lose out on relief is if you are leasing a car with more than 50 grams kilometre CO2 emissions. In that case, you are losing out because there's that 15% penalty I was telling you about. Otherwise, you are going to get relief on the loss in value of the car if you buy a car. It's just the rate is different. And if you're leasing, you're going to get relief on your business usage percentage of the lease costs. Of course, this is only if you are claiming a percentage of your costs. If you are claiming that you are 20% business or 10% business or whatever it may be. Some people don't do that. Some people instead claim 45 pence per business mile. And if you're doing that, then you wouldn't have to do any of this. So you can speak to your accountant to see which way is easier, which way is better. Either way, of course, it's always a good idea to keep some kind of mileage logs. Again, you can chat to your accountant about that as well. So that is the key differences, I would say, between leasing and buying, and hopefully that's broken it down for you a little bit. I can do a worked example if you would like me to, if you are in the mood for more figures, and if you want me to do one on companies, please let me know. I will end by saying that when you are looking at the different financing options, whether that's HP, PCP or a loan, always look at the APR, that's the annual percentage rate that you're being offered. Don't look at the interest rate. Sometimes they'll send you an email and say, I can give you an interest rate of 4% or something like that. And you look at the actual agreement and actually the APR is much higher than that. And it's a good idea to always look at the APR because that helps you to compare like with like. You can then think, well, okay, the APR on this, because the APR is always worked out the same way. So if one person tells you can borrow at 7% APR, you can then go to your bank and see, well, could you borrow any cheaper than that, for example? So that's very important. Whether you go for paying outright, PCP or HP, depends on your situation. It depends on how long you think you're going to keep the car for. It depends on what rate you're being offered, a number of things. So if you're planning a change in your car and you have all of these different options before you and you don't know which one to go for, have a chat with your dental accountant. If you don't have a dental accountant, what are you waiting for? Call me. I hope that's been useful. And if it has been, or if you want to see something else, or you have any questions about this video, please do comment on in the comment section below, and please do click subscribe. Thank you so much for watching, and I'll be back soon with a video on another topic that has been requested. And until then, take care. Bye.